Hi and welcome to Penser Bank and our presentation on Maha Energy, where we released a report and the trading case yesterday, which we had named "The share price does not reflect earnings growth." Maha Energy is an upstream oil-producing asset with 5 assets, 2 in Brazil, 2 in the US, and 1 in Oman. In short, the case has a couple of different pillars. First of all, we see a sharp increase of production volumes in coming years. And second, the oil prices have come up, and in combination, this gives a very attractive earnings growth. We're seeing 30% EBITDA CAGR over the coming 3 years, and this is not reflected in the share price. We have valued each asset separately, cash flow valuation, and we reach a value of 22 Swedish krona per share, which is about 70% upside from where we are today. So starting out with production volumes, we are seeing a sharp increase in production volumes over the next couple of years. We are going from 3,300 barrels per day in 2020 to about 7,000 in 2022 and 10,000 in 2023, and then we have a bit of a drop in 24, and then we are accelerating through 24, 25 and 26. We did see some production disruptions in the second quarter, but they did keep the guidance unchanged at 4,000 to 5,000 barrels per day. Which again is up from 3,300 last year. So we are in the middle of this acceleration, and you know that oil prices have come up quite significantly from the trough during the pandemic. The trough at around 10, they're now at around $70 per barrel. Looking forward, we have set a long-term oil price of $55, so that's the basis of our calculations going forward. But in 2021, it's averaged around 70, up from around 20 in 2020. And this is what's behind the earnings growth, these two factors, the higher production, the higher oil prices, it what gives the EBITDA CAGR. You can see it on the bottom right-hand side. And this is not reflected in the share price. So you can see the earnings trend in the bottom right-hand side in the graph. There's very strong correlation between share price and earnings growth or earnings, and this has spread it apart. And this is very often a very interesting sign when this happens on the up or the downside. And in this case, the earnings growth expectations are not reflected in the share price. And despite of oil prices coming back, we haven't really seen any significant moves in the share price, which we find interesting and strange. We did see a large move in the share yesterday. It was up 15%, but you can still see on the graph that in an historical context that means very little. We've done a cash flow valuation per asset, which you can see on the upper side of the graph. And here you can see that T, which is their Brazilian asset, and we'll come back to that in a second, accounts for the majority of the value with 18 kronas out of the 22. And this is important for several reasons that we come back to this, but this decreases the risk of our estimates and our valuation in our view. So looking at T, so T is a Brazilian asset, which is producing as we speak, and which has an operating cost of $5.50 per barrel, which is one of the reasons why it's very interesting. They are in an investment phase. We come back to that as well, but they are investing in the asset over the next couple of years, which will bring production up. And we are going from between 2,000 to 3,000 barrels per day to around 5,000 barrels per day in 2023 and 2024. Again, the $5.50 of operating cost per barrel is very attractive, and this is what gives the very attractive earnings profile of the asset. At $55 dollars they are making is $37 profit after G&A and exploration is taken off. And this is naturally very, very attractive. You can see what's behind this in the bottom left-hand side. But another thing which is interesting when making a cash flow analysis of cash flow valuation of this asset is that because of the production profile being what it is, that is, the peak is in 2023, and it should also be noted that the production profile is entirely 2P resources, meaning again that there is low risk to this production profile than we have in some other assets. But looking at the values and the accumulated values over time, because of the production peak being already in 2023, we are seeing the majority of the value in the near term. That is, on an accumulated basis, more than 70% of the value is in the next 5 years. And this decreases the risk of the valuation that we made. But this is the lion part of the value of Maha is in this asset. The other asset that I thought we should talk about is Mafrak in Oman, which I acquired, I think, last year. This provides an attractive growth profile for Maha in terms of volumes. So they are investing some this year, some for the next 3 years to reach around $3,000 production, 3,000 barrel production over the next couple of years. And if this is successful, they will then increase production up to 9,000 barrels. The thing with Mafrak is that there is a production sharing agreement with the Oman state. We put it as a royalty, but this brings down the value and the cost, or this brings up the cost of the asset and brings down the value of the asset. And where we had $37 at $55 oil for tea, we have only $19 for Mafrak. And this is what gives the big difference between tea and, in terms of value, between tea and Mafrak. So Mafrak is giving 3 kronas per share to the valuation, whereas we have 18 in tea. So tea is the absolutely most important pillar of our calculation. I think this is important because it decreases the risk of what we're trying to say. So to sum it up, we are seeing a sharp increase of production over the next couple of 3 years and then onwards. And together with the higher oil prices, we are seeing quite attractive earnings growth, and this is not reflected in the share price.